This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning, you're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning, bright and early. We're coming to you from the CNBC TV18 Motilal Oswal studios. Markets are poised at a very interesting juncture. I'm Prashant, with me my colleague Sonia and Nigel. Guys, hi, good morning.
Hi, good morning Prashant, good morning Nigel.
Morning.
Well, it is the end of the week, but you have lots of cues to track today. There's TCS numbers post-market hours, there's the CPI inflation data in India as well as Bharti Hexacom listing. So we have our hands full, it seems.
Well, that's right, and kickstart result season, so that's going to be key focus.
Absolutely. TCS later tonight, right?
Yes.
So in the evening, actually, and we'll, of course, be reacting to that on Monday morning. Now, but there's so much happened, right, in the last 48 hours, and we were, of course, on a break yesterday. No markets here, but the rest of the world was trading. And Wednesday was our last trading session, and the big data point, of course, was the inflation number out of the US, which has certainly moved things. So let's just begin right there, right? US markets, especially the rates market, that's aggressively been repriced post the hot inflation data. So unless you've kind of sort of completely blanked out markets over the last 48, this one has been hard to miss. Wednesday, market reaction in the US was violent, absolutely violent reaction. The 10-year, by the way, and I'm talking about cumulative change now, is up 22 basis points. That's the US 10-year yield, up about 22 basis points in 2 sessions. The dollar index, it's not moved as aggressively, but net change 2 days, it's about 1% plus. We are at about 105.2 on the dollar index. Now, these are two straightforward things which tell you, I mean, you don't need to look at the inflation number. You look at the data points, the reaction in the market, and it's pretty clear which way the inflation numbers went. It's been the third consecutive firmer than expected core CPI print. So, before we got the CPI, we were saying CPI is important because for the third time, labor market data has been stronger than expected. Guess what? The CPI number has also been extremely strong. I was saying this on Wednesday mornings. You look at the last 6 months' history, CPI has moved markets substantially. That's been the experience for the last 6 months now. Now, markets are starting, what are they trying to do? They're starting to price in Fed rate cuts later and lesser. That's the ultimate impact of the CPI number. Equities were also down sharply on Wednesday, but they got a bit of a reprieve overnight. So the last 2-day change for the S&P is down about 0.35%, which is not much. And actually, the Nasdaq is, if anything, up 0.84% over the last 2 sessions. So, as I said, Wednesday was pretty violent and it was a big shakeout. But last night, things have come up a little bit. Even FOMC doves, right? People who've been voting for rate cuts, aggressive rate cuts, and this is one, they essentially now saying that there is no imminent need to cut rates. There was another message, this is from Williams, who said that there is no clear need to adjust policy in the very near term. This is all last night, by the way, and I think that's the reason why at least the short end of the curve in the US cooled off a little bit, but the long end, the 10-year, etc., continued to move higher. Oil prices have also moved up a little bit. Over the last 2 sessions, they're up about 1%. We're above $90 a barrel mark. Commodity strength, of course, has been the big theme for the last week here in India as well. So where does it leave us? I'd say it leaves us, especially it's a Friday, in a bit of a tricky place. We'll get a gap down. And I think the supports then, you'll need to kind of adjust a little bit. The supports come in at 22,600 roughly. That's a 40-hourly exponential moving average. And I think that should be the trailing reversal stop on the way down. The target resistance upside level is 22,977. It's the weekly upper Bollinger Band for the Nifty. Bank Nifty hit 49,000 level on Wednesday. Again, the upside level stands at, based on these bands, stands at 49,312. We left off at 49,986. And support here again comes in at the 40-hourly, which is at 48,425. I think the Gift Nifty, with it indicating a lower start, perhaps will get us around these levels. And it's always, I mean, buying the dips has always worked. Will that be the case today as well? On a day-on-day basis, that is the real question. I would say watch the first 2 hours or so and then decide what you want to do, because later in the evening you also have the TCS numbers, etc. The US market also has been looking a little toppish, I must say. In the last 10 days, we've had 2 bearish outside days. It's not cracked. It's not cracked substantially. Last night, the US market came back up, but it's looking, I would say, in the near term, a little tricky if you're trading markets very near term. Sonia.
Oh, absolutely. And I think the big cue, of course, later this evening will be TCS's numbers. So we'll focus on that on Monday. But if you want to know what to expect, it's going to be a pretty lackluster quarter for the entire IT space, right? For TCS particularly, there will definitely be margin pressures because of the wage hikes that were taken place in the quarter gone by, as well as the dollar revenue growth is expected to be for the entire sector between 0.5% to 1.5% at best. So it's expected to be a very lackluster quarter. Important to know from the TCS management about deal wins, because deal wins have been on the stronger side. So if that is something that continues, perhaps it could give some, headroom to the market. In any case, these IT stocks have been sort of front and center in terms of buying action as well. So keep an eye out on TCS. The other thing to watch, of course, is Bharti Hexacom and the listing later today. You have a lot of macro data that comes out. There's the CPI inflation data. There's the IIP data for the month of February today as well. All of that will come through in market hours. But for our own markets, let's not forget that the Nifty has covered a lot of ground. It continues to sit at record highs around that 22,700 level. Now, the Nifty, if you map from the 19th March low, it's almost up 1,000 points. That's the kind of ground that we have covered. And now, of course, we're facing a bit of consolidation at these higher levels. So the dips are getting bought. The flows are good. Both FIs and DIs bought in the cash markets on Wednesday. FIs bought about 2,800 crores in the cash markets, and put together in the month of April, FIs have, pumped in almost 6,000 crores. So the going has been very good. Let's not forget that other asset classes continue to move higher. So gold once again is at a fresh high this morning. There was large central bank buying action, especially from a market like China. That continues to drive gold. So all asset classes doing well. This morning, there will be a dip. But will that dip get bought? That's the big question. It's likely because that has been the pattern for the last many days. But let's see. For now, things are looking a bit sticky this morning, but largely the trend has been on the upside, Nigel.
Well, if you've been buying the dips, then you've made money.
Yeah.
So I guess, don't change, don't break what's working for you. I guess that's what's going to move. And, though we have the global macro cues, which are a little bit mixed, I think the focus will start moving to micros because we kickstart earnings season as well. And the Nifty Bank, that's the one that's come back to the party. And it's come back to the party in style. Because in this month itself, it's outperformed the Nifty big time. Even in the last 1 month or so, you suddenly see it breaking away. So the Nifty Bank is the one that's been seeing fresh bit of long addition as well. What do the FIs do? Well, they're adding longs big time. In Wednesday's trading session, they added more than 40,000 long contracts, and now they're net long. And if you just pull up the chart, from the start of the series till now, from being net short of around 25,000 contracts or even 35,000 contracts, now we're net long with close to around 50,000 contracts. And that's a multi-month high in terms of net long positions. I'll tell you what, personally, I prefer when the markets are net short because it gives you a reason to see a bit of a short squeeze. But the trend is on the upside, so I'll still say that needs to be maintained. Well, the PCR, that's the other indicator, right? You want it to be a little bit lower. Now it's moving towards the upper end of the range. It's a distance away. 1.6 is normally when we see a bit of a pullback out there, but the PCR is moving higher. And there appears as a strategy that's playing out at the 22,700 call as well as put, which is known as a short straddle. What is that? You write both these two strikes of the, both these two options of the same strike. You look to eat the premium, which currently is close to around 300 rupees. And then you're bracing from the strike, which in this case is 22,700, 300 rupees higher, 300 rupees lower, which gives you the broad range. On the downside, it's 22,400. On the upside, it'll be around 23,000 odd, and that number should come up for you on the screen as well. So that's the strategy that I'm talking about. It appears pretty much that that's playing out as of now. So this is the broad range you're looking at till the next expiry, which is on Thursday itself. A few more important levels that we're looking at. Well, we're looking at Sun TV. That's one stock that will be in focus. And that one, in fact, is going to be in focus because of a couple of reasons. One is delivery data. Very, very good on the NSE. The nominal delivery that we see on Sun TV is around 2 lakh shares. And, given that IPL is in flavor, it has a bit of that into it. A bit of a political twist as well is out there. So that stock could be in focus for the coming month as well. But I'll just look at the delivery data. That's the normal average. And you see last week, you gradually saw it move up. And on Wednesday's trading session, it was the highest that we saw. And it moved up on good volumes, and it took out a couple of technical levels as well. So the stock closed at around 630 rupees odd. It's taken out the 20 DMA. It's taken out the 200 DMA as well. can it conquer the 100 EMA? So that's a stock that I'll be keeping on the radar. The buy on dips has worked, so I think stick to that.
All right. Well, Nigel, thanks very much for that. Well, before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. James Knightley, if ING will be joining in to discuss the global setup. That's coming right up after this. Our research team gets you CNBC TV18's list of top stocks to watch. Lots to cover there. At 8:30, we'll have Siddharth Kemkar of Motilal to talk stocks.
All right, well, let's get you some views now. First up, Chetan Seth of Nomura says another hot US CPI print raises the risk of profit-taking. Though some of the strength in the March CPI was temporary, but recent resilience in rent-related components and a rebound in wholesale used vehicle prices suggest core inflation is unlikely to decelerate quickly, which will likely push out the timing of the market expectations for the Fed rate cuts. Any sharp rise in the US 10-year bond yield towards 5% will be a key risk factor for stocks, including Asian stocks.
Money market views. V. Lakshmanan of Federal Bank says that the US inflation has surged to 3.5%, marking the 36th consecutive month with inflation being over 3%. And the second consecutive monthly increase. Consequently, he says the US dollar index is trading at a 5-month high, while the US 10-year Treasury yield rose to 4.55%. He says the Japanese yen has fallen to a 34-year low, while the Indian rupee is hovering around all-time lows. Thus, he expects the rupee to trade between 83.24 to 83.7 to the dollar for the next few trading sessions.
And on the bonds, Lakshmanan says government bond yields traded higher, tracking rise in the US Treasuries amidst lack of domestic triggers after the RBI MPC was along expected lines. He said the US CPI inflation came in stronger than expected at 3.5% year-on-year, driven by housing and fuel prices, raising uncertainty over the timing and the extent of rate cuts from the Fed Reserve this year. He says coming sessions could see the 10-year benchmark bond yield trade in a range of 7.1 to 7.2%.
Well, we've got a lot of stock-specific action track for you. We'll get to that in just a bit. But for the time being, we'll run you through our top 10 list. We're looking at Indus Stars, NTPC, Dr. Reddy's, Metropolis, Phoenix Mills, Maharashtra Seamless, and NIBE. All of them will be reacting to positive news flow. On the flip side, Vodafone Idea, Sun Pharma, and Oil India will be reacting to negative news flow.